Welcome to Forex Prodigy. Good morning. And I'm saying that because I had to wake up early to catch this trade. We're on the USD CHF daily chart. And let's go ahead and point out a few things. Look at this bullish outside bar, right? And it's on great support. Now, you see I have a few things marked on my chart. So there are a few different elements that goes into why this is a great trade. On my last video, I said I would make a video on how to use indicators, and I think this trade is a great opportunity to show how I use indicators. All right, so first of all, let's point out the fact that this is the extreme high of the consolidation, and we've actually reached the extreme low of consolidation for the third time. You see price touch this consolidation once here, a second time here, actually a few times here, honestly, and then I'll go ahead and say the third time here. So it's kind of like a triple bottom situation. And you go back in the videos, you all know that I use price exhaustion and price action. So we go down in the trend, we see a bit of rejection within the trend, price creates these little wicks, and then we have market indecision here in this bar. Let's see if we can get this bigger. I've been having a little trouble with this chart, but let's see if we can get it a little bit better. Doesn't look like it. Okay, well, we'll just have to stay like this. Well, you see a bit of market indecision with this little bar here, and we have this nice bullish outside bar for our price action with a large wick like we like it. I like to point out the fact that I'm using about 3 different indicators on this chart, and let's just go through them one at a time, okay? All right, first of all, let's start with the MACD, okay? Now, with the MACD, a lot of people will tell you all kinds of crazy things of how to use this. They say, don't get into a trade unless the MACD is going along with the trend that you're in. So they will say, for instance, when MACD crosses this line here, that you should sell, or they use the indicators as their main their main signal to trade. I would say they use it as their main decision maker for why they enter a trade, and I encourage you all to listen to me and don't do that. First of all, when you use your charts, try not to use indicators to start out with. First of all, get comfortable with looking at your support and resistance levels. Practice making these lines on your charts to box consolidation, so you see where's the extreme high, where's the extreme low. When price gets back to these areas, try to trade off of these strong areas and be patient and wait for price confirmation, like a nice bullish outside bar or even a pin bar. Let's say if this was a pin bar. So you mark these crucial areas on your chart, and then you're patient and you wait for price to come back to these levels and give you a price action confirmation bar. That's the way to trade, okay? And get used to doing that first, right? And then later use these indicators as even further confirmation. That's what your indicators should be used for. Further confirmation of your support and resistance levels. That's what indicators are for. They don't give you any more, any less than that, okay? So let me start with the MACD. All right, we have what you call divergence in this trade, and what divergence basically is momentum. Okay, so we see that momentum is starting to shift. You start here, okay? You see that right here at this low, MACD was at its lowest. All right, price return here. MACD is starting to trend up actually. Even though you see that price is touching the same levels, the MACD is showing that momentum is starting to turn up. Okay? By the time you get to this third level, MACD is even higher. So even though we've touched this same low multiple times, MACD is showing that the momentum is actually reversing to the high side, to the bull side. And so when you see that the trend on your chart is either going down, or let's say if it's touching the same level of support, and MACD is going up, that means you have divergence. All right, so our trend is touching the same lows, but MACD is steadily rising, and so this is divergence, and it's it gives you a signal that momentum is going to go up. Now, divergence is nothing without this price confirmation bar, this bullish outside bar. I would not be in this trade off of divergence alone. You need this you need to use this as confluence. Your indicator should be used as confluence. You have nice support, a nice bullish outside bar at support. On top of that, you have nice divergence to go along with it on the MACD, telling you that price is losing momentum to the downside, and it's gaining momentum on the upside. Okay, that's further confirmation. All right, so that's the MACD. Then we have the stochastics indicator, which tells you that when it crosses this line up here, this 80 line, and this 20 line, when price gets below this 20 line, that means that price is oversold. Okay, and when price is oversold, you'll see that these lines begin to cross. You see up here, it was overbought, and the line crossed, and it's coming down. It's here oversold, and so now price should correct itself and turn up. All right, so you look for stochastics when it's below the 20 line and above the 80 line. So below a 20 line, when you're looking for price to reverse in a bull market, 80, you look for it in the 80 line because price is overbought, and therefore it will reverse into a bearish market. All right, so up here you can see that we were overbought, right? Because price was stuck up here, and we were in this overbought area above the 80 line, and we didn't get any price action confirmation up here. So I wouldn't have just entered off of this alone, but in fact it did turn down, and we did see price reverse into a bearish downtrend. Okay, so yeah, so basically that's how you use these. You use these as confluence. You use them in conjunction with your price action, your support and resistance. And you know, a lot of times I use stochastics in combination with the MACD. So guys, indicators are subordinate to support and resistance and price action. Don't try to skip steps. That's where people get in trouble. They try to skip steps and use indicators for the wrong reasons. All right, and so in my videos I don't talk much about indicators, because to me they are not as important as understanding how to use support and resistance along with price action and how to enter your trades. All right, so that was my little spill on indicators. If y'all want me to cover anything else on indicators, just comment on this video, leave a message in my inbox, and you know, I'll be glad to talk more about it. But besides the extra confirmation that indicators give you, you know, they're pretty they're not really reliable. They're only reliable as an extra confirmation. All right, just really quick, the MACD. All right, look at my parameters. I use a 30 period for the MACD, 26 and 9, but the 30 is the most important. And on stochastics, hold on, let me see something. Okay, so you have the MACD, right? So I have the fast EMA working at 30, the slow EMA at 26, and the MACD SMA at 9, right? And for stochastics, I use this 30 period for the percentage K, 3 for percentage D, and yeah, 3 for the slowing. Okay, so but I would say the most important is this 30 percentage K and this 3 percentage D. It works pretty good because that means 30 represents the number of periods that it uses to give you this chart. So it's going off 30 periods, which is a pretty I mean, from my experience, it's a pretty good way to see price as an overall trend. You don't want to use too low of a number because then you won't have the overall view of the market, which is important. All right, very quickly, you all know I've said it before, I use 2 EMAs on my charts. This blue line is the 150, 365 is the that kind of this orangey brown line, and basically I use these as support and resistance. Whenever price touches these EMAs, it usually respects it. So sometimes price, when it comes back to the 365 for the first time in a very long time, you might get a nice pin bar here or a bullish outside bar like this one, and you'll get a nice push up. You can see right here that I'm actually using the 150 EMA to enter my trade. Price actually closed right above this 150 EMA, right? You see it closed right above it, and I entered the trade right here because I knew this 150 EMA could very well work as support, and it did. Price did not go back below this 150 EMA. Granted, it is early in the day and we haven't broken the high of our bullish outside bar. Price may retrace for a bit, but regardless, this is a great place to enter your trade right when price is closed above the EMA, because if price does come back down, the EMA will work as support and or resistance depending on which way. But in our case, support. Price, we want price to go up, so this held as a strong level of support. So guys, we'll see how this trade goes. I'll give you all an update, and basically, you know, I just wanted to tell you guys about these indicators. Be very careful using these indicators outside of the fact that they're good for confirmation. Don't put too much weight on your indicators. All right, use your own knowledge, and you know, don't let your indicators handicap you. All right, so that's pretty much it. I appreciate you guys for tuning in. If you got anything out of the video, if you enjoyed the content, please hit the like button, hit the subscribe button, and you'll get all of my updates. And I'll see you guys on the next video.